Hello everyone, good afternoon to those in the UK and good morning to those in the United States, and welcome to our Doing Business in the USA event. I'm Dan Brooks, the tax partner at BDO in Leeds in the UK and responsible for international as a whole within BDO's Leeds office. I'm delighted that so many of you have been able to join us for our first virtual running of this event and that demand to hear about the opportunities that the US market presents continue to be front of mind for many UK businesses, notwithstanding the challenges that the world is currently facing with the global pandemic. The slides we present today follow an abridged format of those which we have presented to events in Yorkshire and the North East over the past 5 years. I want to thank our co-presenters from the Metro Atlanta Chamber, Department of International Trade, Arnold Golden Gregory and BDO US for their continued support and partnership. The format of the event is roughly 1 hour of presentations and 30 minutes of Q&A. To aid the flow of the presentation, we ask that you include all questions within the Q&A function in Zoom. Please include them as we go through the presentation, but bear in mind, we'll not answer them until we get to the end of the presentation session. We've got 30 minutes at the end on Q&A, and we will go through those in some detail. Next slide. Our agenda starts with a macroeconomic piece around the opportunities for UK business in the US from Andrew Staunton, the British Consul General in Atlanta, followed by John Woodward from the Metro Atlanta Chamber on location choice, Tycho Stahl from Arnold Golden Gregory on US legal issues, my colleague in Leeds, Laura Chivers, and Monica Lovin, our Head of International Tax for BDO USA, on tax issues. And last but not least, Simon Bedford on DIT support available to you. Over to Andrew. Next slide.
Hi, good morning everyone. I hope you can all hear me okay. If maybe Dan could give us a thumbs up. Okay, excellent. So I thought I'd start by sort of giving you a sense of what a Consul General is, because you might not have come across it in Leeds or North Yorkshire. So my name is Andrew Staunton. I'm the British government's representative in the southeast of the United States, based in Atlanta, but covering 6 southeast states. So I've been a career diplomat for more than 30 years. As a British government's representative, I focus on political engagement, public policy engagement, supporting trade and investment, and also consular assistance. And I'm really glad to be able to join you, apart from the fact that Hurricane Sally is currently depositing a large aspect of rainfall in the US Southeast. So I'm watching that as well. I wanted to start off by talking about the sophistication of the relationship, the trading relationship between the United States and the United Kingdom. A couple of factoids for you. Did you know that every day 1.3 million people, American citizens, go to work for UK companies, and that every day 1.7 million British citizens go to work for American companies? So that gives you a sense of it. We are the 5th and 1st largest economies in the world. We do a hell of a lot of trade. Total trade is more than 300 billion, and each country has got more than 1 trillion invested in each other's. So we're reliable, regular, and successful partners. Just on the scale of the opportunity in the US before we get into some of the more specifics, if you combine the GDP of the 6 southeast states, so that excludes Florida, so just those 6, that would be the 7th largest GDP in the world. So here it's a very sizable market, a very important market, and one where there is keen interest in the United States for opportunities for collaboration with the UK. There's a great desire to understand developments in the United Kingdom and in the United States. And I think all of you are probably thinking about where you look to put your efforts in the future, given what's happening with our decision to leave the European Union, and the real sort of shift in the UK government's position to ensure that we are providing support to exporters, that we are encouraging investors into the United Kingdom, but increasingly that we're supporting British companies who are looking to establish a presence in the United States. And we're better on the back of that sophisticated trading relationship to look at than the opportunities in the United States at this moment in time. So I don't do all of this on my own. Within my consulate in Atlanta, I have a team of 10 members of the Department of International Trade. And that's part of a network of 140 members of staff that are spread across 8 consulates in the United States. The cities probably would come off the tip of your tongue. So New York, Chicago, Boston, Miami, Los Angeles, San Francisco, Houston, and Atlanta. We're there to help, support, guide, and open doors. And I think one of the things we find, and I found in my 2 years here, is that sometimes British companies don't actually appreciate the level of support that's available from government in terms of helping you navigate the scene, in terms of opening doors, and in terms of introducing you to partners like the Metro Atlanta Chamber and to international law practices such as the one Tycho represents. We're good at it, so the more we can hear from you, the better. So some of the other panelists will talk about the strengths of Atlanta and the strengths of the Southeast as an investment destination or a place to do business. I'd like to perhaps reinforce a couple of points. I mean, since I've arrived here, I've been very struck by that the importance of the US Southeast and cities like Atlanta is growing politically, culturally, economically, but also from the perspective of tackling racial injustice, tackling social justice, where Atlanta has been in the forefront of that. So people coming to this part of the world will find a city in Atlanta that's dynamic, vibrant, lots happening, that has got a clear sense of what it does best and a clear sense of the diversity of its offer. I'm talking about in terms of talent, the skilled workforce here. I'm talking about the quality of the universities, Georgia Tech, UGA, the University of Georgia, and others from the surrounding regions. The low taxation situation obviously helps. And also the connections to other parts of the United States. I think I'm right, but I'll be corrected that you can reach 90% of the US population within a 2.5-hour flight from Atlanta, the world's busiest airport. I would also like to stress the business environment. What I've been really struck by here is that people talk about the Atlanta way. So it's competitive in terms of costs, labor costs, accommodation costs, property costs, but it's also so supportive of giving back. I've been working very effectively with the fintech sector, and I was astounded that some of the British companies that were already here, such as WorldPay, before it changed its ownership a year ago, are so receptive to other fintechs from the United Kingdom in terms of giving them advice, in terms of helping them, in terms of, in some respects, baking a bigger pie. You know, so there's a friendly competitiveness here where people are really trying to invest in that sense of establishing clusters. They also have shown over a number of years a real willingness to engage. So John and Tycho have done many of these in person across the United Kingdom because they understand something that's very, very apparent to me. One of, if you like, my mission statement in trade and investment is to encourage British companies to think Southeast. So if you're looking to make that journey to the United States, consider Atlanta, consider Nashville, consider Charlotte, consider Raleigh, consider all of the main cities, which are becoming the big economic drivers, particularly pre-COVID, of all of that economic development and high-tech engagement within the United States. So I'm encouraging British companies to think Southeast while trying to ensure that US companies understand that there is more to the United Kingdom than the Southeast, so more than London. So that's why it's really wonderful to be here today with representatives of companies from Leeds, from North Yorkshire. And before coming here, I travelled the United Kingdom to go to places like Edinburgh, Glasgow, well, I had to see my parents somehow, Manchester, Liverpool, Leeds, Cardiff, to get that sense of the strong offering, the strong regional focus. And it's not for me to quote my Prime Minister too often, but there's a real sense here that Atlanta and the Southeast offer a real perspective of supporting that sense of the levelling up agenda and also building back better from COVID-19. Others, such as John and Tycho, will go into some of the strengths, but I would just touch on fintech, cybersecurity, the entertainment sector, the creative sector, advanced engineering and automotive, where if you come here, when you come here. If you do it virtually, I think you'll be astounded by what you see here. There is a good reason why many of, well, up to 20 of the Fortune 500 companies have chosen this region or Atlanta, Metro Atlanta, to be their headquarters. There's a real sense of vibrancy. People are clamoring to get here. But while they're clamoring to get here, including investors from all parts of the world, there's a real affinity to doing business with the Brits, which I would like you to try to tap into. And one final word, we've been very, very successful in working with the Northern Powerhouse, which I think encapsulates the Leeds and North Yorkshire region, so that we can actually matchmake in a sense. So we've had trade missions, we've had events to really give that focus about what's happening in the United Kingdom, what's happening in the southeast of the US. So we're here to help, that's all I say, but don't underestimate the level, nature and expertise of that help. The team who work for the Department of International Trade can gain you great advice here, working with partners like the Metro Atlanta Chamber. But there's also that perspective of, if you're looking to exploit a market of 300 million people, this is a great state to start in, but then you can look to expand your presence into other states. And I would just like to finish with one thought. The United States is a country, it's a very proud country, but it's also a continent in terms of scale, but also a continent in terms of the size of that opportunity. So please do come, and if I can be at all helpful, I look forward to hearing from you. Thank you.
I guess I'm jumping over. Thank you so much, Andrew. Good morning, good afternoon, everybody. I'm John Woodward. I'm the Vice President of Global Commerce at the Metro Atlanta Chamber that Andrew so kindly referenced. My team works on cross-border trade and investment, that is outbound from this region and inbound overseas. And I'm just going to step back a little bit and talk about economic incentives in general in the US. The Consul General was kind enough to cover a lot of the Southeast area. So I'm just going to more macro level here. Laura, if you could pop on real quickly to next. In economic incentives, that's Atlanta, by the way. Go ahead, Laura. Incentives in the US in general are basically going to be on statewide or local. That is, there are 50 US states, thousands of localities. So obviously there's a labyrinth of incentive structures out there. They may be statutory, that is by statute on the books, or they may be discretionary, depending on the project. Oftentimes they're structured as industry specific. So a state or a region might want to encourage a certain industry, which could be relevant for you if that's your industry, or they may be geographic or locational specific. And then of course, they're the macro incentives in general that we'll cover in a second. Laura, you can pop on, please. On the state side, again, there are 50 US states. They all have different incentive schemes, but many of them, most of them are structured as tax credits. That is a credit against your state tax liability, which means you need to have a state liability to benefit from that. They may be structured as an infrastructure improvements. That is, if it's a greenfield site, a factory being built where there's no utilities or roads, the state might come in and partner with the locality to put in infrastructure that would qualify as an incentive. Often they're structured as workforce training. And I say this each year, and unfortunately it doesn't change each year. The US has a labor problem in terms of skilled workforce, and it's nationwide. And often we hear that. And so the more aggressive US states out there have good work training programs in place. In the state of Georgia, it's called Quick Start, which is one of the top ones in the country. And that might be important if you need to have skilled or you need to have your workforce trained for your particular project. As I mentioned earlier, they could be targeted industries. So in Georgia, again, as an example, the film industry is very strong. It's a film production hub in the world, actually. The state appreciates that. They want to encourage that. So there are incentives on the books to encourage film production, digital media production, and other states might want to encourage sectors in their area. There may be particular state assets that the state wants to encourage. Again, Georgia is an example. 2 ports on the Atlantic coast, a container port in Savannah, a bulk and automotive port in Brunswick, Georgia. These are state assets. The state wants to encourage their use. So there are incentives, for example, to use those ports. So that might be something that might be relevant if you're bringing in widgets or something. Single factor apportionment formula is complex, but it's just underscores that there are different structures within the US states. We'll let the accountants discuss that if there's time. And again, they could be discretionary incentives. Often they're jobs based though. Laura, you can The main thing about incentives is that they are a function of what the government can control. So on the state side, the government can control those issues there. On the local side, that's counties and cities, the principal state taxes there are real estate taxes. So incentives on the local or county side might be real estate tax abatements, for example, because that's what they can control. They could be personal property or machinery and equipment incentives. Again, these are predominantly local incentives. So if you're a heavy computer user or lots of personal property, that might be relevant for you. Many sales tax are local taxes. So there could be incentives on construction materials to build a new facility or on machinery and equipment, as I mentioned. Then there are different alphabet soups out there, IDAs, IRBs, enterprise zones, things like that, that are on the local level. I will mention the two bottom ones. Public utilities are often structured or collaborate with the localities. So for example, if you're a heavy energy user, there could be incentives from the energy company for lower electricity rates, for example. Or, and then lastly, they are permitting and fast track. Those are always local issues. They're always critical. Whether you're a one-person sales office or a 5,000-person factory, you're going to need a local permit to start operations. The fact of the matter is, some of those thousands of localities in the US are quick about issuing those permits and cooperative, and others are slow. And so you just need to make sure you're aware of the ones that are business savvy. Laura? I mentioned the geographic incentives. These are simply locational specific. I won't go into details here, but if you're in that specific area, there may be an in place versus being outside of it. The caveat there is the owners of the properties in that area know they're in a special area. So the rent might be higher, for example, which might offset whatever incentive there might be. So there's all sorts of back and forth in this play of incentives. That's the bottom line there. Laura? And so site selection is the principal one. Laura, you can press on to the next one, please. As I mentioned, the macro side, this is really what we consider to be the overriding economic incentive. All those incentives I just mentioned before are finite. That's the one common denominator with incentives, is that they end. The site selection is permanent. Presumably, you're making a decision for a long-term choice. So if you're going through the US site selection process, and this line here is sort of a chronological line, we're all the way on the left-hand side right now. The incentives part comes in somewhere in 2/3, 3/4 part until you get to the far right-hand side where you have that pretty US factory with the flag on the roof. So the best economic incentive is doing your due diligence on that site location. Laura? So this is just a quick one screen look at those incentives, as we call them, that are permanent, that are long-term. And there's tremendous variance within the US on these. Expenses, the principal ones are going to be labor and real estate. Those are with you day in and day out. Taxes and regulations will be covered by our accountant friends. The workforce, I mentioned that earlier, attracting and finding that skilled workforce. You can't spreadsheet your way out of that. Access to market, the Consul General meant access to various areas within the US, but that supply chain is a locational factor, can't be incentivized away. Universities, colleges, fees into the workforce, quality of life. And again, as I mentioned, these are factors that are with you day in and day out. They do not expire like incentives do, so you need to do the due diligence on those. Laura? Andrew mentioned clusters. We do think that clusters are significant. On the left-hand side, you see why that's important. The precedence is there, the supply and the workforce, all those issues that we're discussing. The networking, that infrastructure, that business infrastructure is usually in place where the cluster is. And to give an example, two smaller examples there on the left, if you're in the oil and gas sector, you should probably go to Houston, Texas. That is the cluster there, the predominant one there, and it doesn't make sense to be elsewhere when that's the one. Interestingly, if you're in athletic apparel, maybe Portland, Oregon, which is the headquarters of Nike and Adidas in the US, happens to have an athletic apparel cluster. In Atlanta, Andrew mentioned FinTech, the Consul General mentioned FinTech. Other clusters in Atlanta are supply chain, as I mentioned, IoT, cybersecurity, health IT, advanced manufacturing, we'll cover in a second, and esports, video sports. So these are objectively strong clusters where that infrastructure is in place. Laura, next slide, please. And to give an example of what that means, Andrew mentioned advanced manufacturing and automotive. Here's the a map of the automotive, the foreign automotive OEMs in the United States. Almost every single foreign automotive OEM is located within an 800-kilometer radius of Atlanta, basically the US Southeast, roughly Andrew Staunton's footprint there for the consulate. So what that means is you have the OEMs clustered there. Of course, you have the supply chain, the tier ones, tier twos are there, but also you're getting the headquarters. And on the left-hand side, you see Mercedes, Porsche, and Peugeot are all in Atlanta. Nissan is in Tennessee. Toyota's headquarters are in Texas and Volkswagen in Virginia. So not only do you have the manufacturing, you have the offices as well. That's the power of clustering. Laura? I'll just go through a couple of these real quickly. These are just data points. My encouragement here is to treat a site selection just as you would your own business. Do the due diligence. Use data. Don't base your decisions on emotions, on hunches, on whims, on where you had a good family vacation, on your favorite TV show coming out of the US. Base your decision on business data. And I will emphasize this: business data is available. There are consultants out there, site consultants, these are not the good ones you're talking to here, but there's site consultants out there who do this for a living. They charge fees for this. Some are very good, but the point is you can get this data for free. It's out there. I encourage you to look for it. Here's an example of economic data to judge what the employment rate or the GDP of various metros are. Andrew mentioned Fortune 500 headquarters. That's an indicator of business acumen. Laura? Demographics are an important one. The Consul General mentioned some of the fastest growing areas. I highlight there the fourth line down, projected population growth, which I think is a very telling statistic. There's a huge variance within the US of areas that are growing and not growing. And that should tell you a lot about where your market is, where your workforce is, where you might be going. And in Atlanta, for example, the figure there is 8%, if you can see it, in projected population growth. In Boston, it's 3%, Chicago 2%, New York 2%, and those figures actually are going down, as a matter of fact. And that shows where this shift is happening within the US that is different from maybe the traditional US gateway image of 10 or 20 years ago. Laura? Andrew mentioned the transportation and access. He mentioned 90% of the US market. I think it's 80% of the US market actually available within a 2-hour flight of the world's busiest airport, but that's also in Atlanta, but that's also 2 truckload deliveries. So for example, if you're setting up a business and you're moving widgets or you're moving people, you might be a salesperson, you need to make sales calls. You can go and do those sales calls in different cities and get back. This is another big variance. A lot of areas don't offer that or offer that accessibility. On the West Coast, of course, it's great if you're only serving the West Coast, but if you're serving 80% of the US market, which is on the eastern third, then you've got to make that, and that's going to be a 2-day trip automatically, in addition to another 3 hours back with the mother office. Laura? Again, real estate is one of those factors that varies dramatically. It's with you day in and day out. Tremendous variance. Real estate rates don't go in there, but that's an example of that. Laura? And then lastly, taxes. I know our friends will go into that, but I would suggest looking at some of these indices. Here you have the overall cost of doing business index. This takes in a basket of goods for comparative purposes. In this case here, that's that top line. The US average is pegged at 100 for comparative purposes. That's the US average for this index coming out of Moody's. That means I'm up. But you see there that in Atlanta, for example, it's 92, which is below the US average. In Boston, 127, New York, 155, San Francisco, 174. So what that tells you, there's an enormous, enormous difference in just overall cost of doing business. And that will be with you day in and day out. Lastly, I think there's one last slide, Laura, if you could. Yeah, this right here is just to, frankly, a cautionary tale to beware of maybe folks like me or anyone out there shining a red bauble and saying, come here, we have free land, for example, or we have 0% US state income tax. Well, there are going to be caveats out there. If it's free land, for example, most likely it's out in the middle of nowhere, which means you'll have a tough time getting a skilled workforce. 0% state income tax, they may have a margin tax or a receipts tax. So again, my stress there is to do the due diligence just like you would with your own business. The data is available. We're happy to provide it. Our partners can, and we're happy to answer questions afterwards about this. Thanks so much. I appreciate that. And I'll pass it on to my colleague here.
Over to you, Tycho.
Hello. Am I visible? Can you hear me?
Tycho, we can hear you and you are visible.
Okay, my name is Tycho Stahl. I chair the international team at Arnold Gold & Gregory, a law firm here in Atlanta, and I represent currently about 140 European companies, including maybe 20 or 30 UK companies in the United States. I wanted to talk about US market entry steps, but first wanted to give you a couple of preliminary observations. I was just in Europe 10 days ago, and absolutely everybody wanted to stare at the lone American for miles around and ask what's going on in the United States. And I guess the simple answer is that very little has changed. We have legal stability here. We do not have riots in the streets everywhere. People are doing business. Life is going on quite close to normal, although obviously there is upset and change. But the situation on the ground in day-to-day life is much more stable and normal than you would believe by watching the telly. Another issue is I hear Europeans tell me that it's difficult to come to the United States, and it's true that there are entry restrictions. However, my law firm has had very good experience helping people with a national interest exception actually travel to the United States. And I myself have found that putting enough effort into it, it's possible for an American to travel to Europe too. Having been there 2 weeks ago and going back next week, it actually is possible to do international business these days. In the face of the pandemic, there has been economic upset in the United States. The US government and a little bit on the state level have offered significant supports in the form of refundable loans and other regulations. This is not the moment to provide exhaustive detail, but significant support has been available and continues to be available for people who are doing business here. I would like to add, following my friend John Woodward talking about incentives, the vast majority of our clients coming to the United States do not find incentives to be particularly relevant to what they're doing. It's more if you're going to be opening up a major North American headquarters with dozens or hundreds of employees, or if you're going to be setting up a manufacturing or assembly facility, then we should probably talk about incentives with John, with BDO, with my firm. But in the meantime, if you're simply opening up a sales office, doing a joint venture, acquiring a company, then incentives probably are not really going to be all that relevant. On the employment side, there have been some changes in the some more flexibility in employment relationships and to protect workers has become part of the law here. On the other hand, it is still an extremely open, easy, and friendly environment in which to do business. It's very easy to hire people. It's very easy to let people go in most of the United States. So you should please not be afraid of employing Americans if you come here to do business. I think the most fundamental observation I would make, I think all of us, or most of us at some point, were handed by someone, probably a boss when we were younger, a book entitled Who Moved My Cheese? This really is a who moved my cheese moment of dislocation and change in the economy. There are winners and there are losers. Obviously, the pandemic is not a good thing for the economy generally, for the UK, for anyone else. On the other hand, we currently have a UK client that has received a very, very large several $100 million order relating to a home delivery business. That was an opportunity created by the pandemic. So while there are obviously losers during the pandemic, there clearly also is opportunity. We've also seen many people in the e-commerce space that are flourishing right now owing to the pandemic. So it is not all doom and gloom out there. The last preliminary observation I'd like to make is please, please do make use of local advisors in the United States. When you go to China, you know, people generally have it, the people on the street generally look a little different than they do walking down the street in London or Manchester or Birmingham. The smells are different. You maybe don't speak the language. You just know you need local help to avoid missteps. Most of you have probably been to the United States. You find us to be very welcoming, very easy to talk to. And then many foreigners think that they understand our country. I would tell you, please think China and not Europeans or Anglo-Saxons like us when you come to the United States. Americans are different. If I give you one very small specific example, I see many UK companies turn to their UK lawyers to do business in the United States. And then I see language in there about title retention. Title retention is a concept under UK law, under the law of many continental European countries. On the other hand, in the United States, we have security interests. Security interests are virtually the same concept as title retention, but if you have a UK lawyer draft a contract that mentions title retention, then you do not have a security interest under applicable US state law, and you basically are unprotected. Please, please talk to BDO about tax matters, talk to a US lawyer about the contracts that you're entering into and the way you structure your engagement with the US. Please talk to John Woodward and the UK DTI about the business environment here and get some local advice. When you come to the United States, if you look at the presentation I have in US market entry steps, first, you need to make sure that the product can actually be sold in the US. We have found, for example, that a bicycle that can be sold in a European country does not necessarily fit the regulations to be a bicycle in the US, and that changes have to be made. If you have customers and opportunities here, presumably you have already dealt with these issues. Second, if you are going to hire people, have a place of business here, or have inventory in the US, people, place of business, inventory, then there is a risk that you will trigger a tax permanent establishment here. And it's time, please, to call Dan and Monica at BDO and see if you need to form a US legal entity and what type of entity that should be. The choice of US legal entity is exclusively a function of tax efficiency and has nothing at all to do with liability. The three possibly applicable forms of entity are equally good and bad from a liability point of view. This is solely a function of tax optimization. Forming a legal entity here is extremely quick, cheap, and easy. It's about $1,500 in filing fees, plus $2,000 to $6,000 in advice, which mainly involves answering questions that you may have about how the entity is structured and how contracts here work. It is very easy. I saw a question earlier about Delaware. I would reflexively always organize the US legal entity under the laws of Delaware. This has nothing to do with a site selection choice. You're going to set up an office. You're going to have customers wherever they are in the United States. The choice of Delaware to form an entity has nothing to do with that. It's simply standard. There are other considerations. I can go into more detail offline. One of the other questions that we get quite a bit is liability. People in the UK have heard about the cat in the microwave and various issues in the US and are very much afraid of liability here. I liken liability issues very much to fire insurance that you would have for your home, for your facilities, for that sort of thing. I would bet you that all of you have insured your homes, your businesses against destruction by storms, by fire, by whatever. That doesn't mean that houses and factories are falling down and burning left and right in the United States. It's simply something that you do in case you are the unlucky 1 in a million who gets struck by lightning. The same with liability in the United States. If you live long enough, you probably will have a dispute with somebody in business in the United States, but that can also happen to you in the United Kingdom. I would simply suggest that you set up the way an American would, that you please get legal advice and accounting advice, and then Godspeed and focus on your business. Liability issues are not going to get in the way. If you set up a US legal entity, You run your contracts with US business partners through the US legal entity and not with the UK. If you observe very, very simple corporate formalities, which generally a corporate paralegal in our law firm would handle at, I don't know, $200 a year or something like that. I mean, it's peanuts. Then most issues are going to go away. The only issue that can always hit you in the UK, whether or not you have an entity in the US, is going to be product liability, which is direct liability by the UK entity to third parties in the United States who claim to have been injured by your products. That can be addressed with insurance. There's certain other insurances that you might need, director and officer insurance, general commercial liability, and that sort of thing. You'll see those in the outline that's part of the presentation. But basically, the advice that I want to give you is, please, please don't think that just because we're a former colony, that we're another Anglo-Saxon country exactly like you guys. Things are different here, but they're very easy to solve. Just please talk to BDO, please talk to us or other counsel, please talk to UK DTI and the Metro Atlanta Chamber. Get some advice as to how things are done locally here. It's extremely simple. The US are wide open for business. We can help you set up as you would normally, and then Godspeed and focus on business. This is a very easy place to do business, even today. Thank you, and if you have questions, I'm happy to answer them. Dan?
Thank you, Tycho, for that. And we'll take the questions at the end of the session. I think we'll hand across to Laura and Monica.
Thanks, Dan. Thanks, Tycho. Let me know if you can't hear me, but I'll assume you can. So I'm Laura Chivers. I work for BDO in the Leeds office as a corporate tax senior manager. So I work alongside Dan with a lot of our international businesses. And what I'll be doing today is just running through some of the key tax things to be aware of. I've been with BDO for 10 years now, so a little while. Slide, Laura. So just before I get started, just to give you an idea of BDO's presence in the US, we've got a map here which shows all of our 65 plus offices. As you'll see, we've got an Atlanta, Georgia office there, and we're lucky enough to be joined by Monica and Tony from the Atlanta office too, who'll be answering some of your questions later in the session. Generally, we work quite a lot with our international BDO member firms, including the US from the Leeds office. So we're always happy to talk to people about doing business in the US and referring them to the right contacts that they need. Next slide. So this just summarizes the topics that we're going to cover in brief today. It's quite a short slot, so it'll be a bit of a speedy tour through, but the idea is just to give you an idea of what tax items to keep an eye out for when you're expanding or doing business in the US. One of the concepts that I think is worth noting up front is around the layers of taxation in the US. So we'll be mainly talking about federal taxation, which applies across the whole country, but there are state and local taxes as well, which can differ. So it's always worth just keeping that in the back of your mind, depending on where you set up and where you're planning to do business. Next slide. So different activities will cause different triggers in the US for tax purposes. There's a UK tax treaty with the US, and that allows us a higher threshold for triggering tax obligations in the US. So it's worth just being aware of that. But generally speaking, within that treaty, there's a definition of permanent establishment, which will cause you to trigger US tax obligations. That can vary between the different triggers, but really a physical presence, so something like an office in the US will trigger tax typically. Having an agent in the US, so someone who's concluding contracts on behalf of the business, might trigger permanent establishment and therefore tax consequences. So you just need to step back and think about what your business activities are. Could they be triggering a taxable presence in the US? One other point that I'm going to come on to is around digital and remote selling. So even where you have a UK business selling into the US and you might not have a physical presence in the US, you can still be subject to state and local tax on those sales potentially. Then, as Tycho's mentioned, legal presence is another factor. So once you've got a tax obligation being triggered in the US, you might then want to think about setting up a legal presence in the US. So there's I've got a couple of examples there of different types of setups: branch, C corporation, and LLC. C corporation and LLC are a separate legal entity, whereas a branch isn't. So the protections that Tycho refers to around legal, from a legal point of view, would apply to the C corporation and LLC, but not the branch. So that's something you might want to think about when setting up. Similarly, a branch, the advantages of that can be that if you've got losses in your US business when you first set up, then they might be able to be used against the profits of the UK business. So it's just something to weigh up before you make a decision. Next slide. Oh, sorry.
Laura, you're quite faint. I just wonder if you can speak up a little bit.
Yeah, of course. Is that any better?
Yeah, thank you.
Okay. Next slide, please. So business funding. So as for any investment, you'll want to consider how you fund your US operations. From a tax point of view, debt versus equity might cause different tax consequences for the business. So there are different corporate tax rates between the UK and the US, and the UK's tax rate is slightly lower. So that lends itself towards saying it might be that you might want more debt in the US, because if you're able to get a tax deduction on that, the interest on that debt, then you're getting a deduction against a higher tax rate. So there's more of a saving there. But similarly, it will depend on your business, what you want, what returns you expect or plan to have from the US business. So there's a few factors to be considered, but tax might be one of those. Similarly, in terms of getting cash out of the US, you're looking at interest or dividends on debt and equity. And withholding tax does apply to interest and dividends. There's a domestic rate of 30% withholding tax, and this can be lowered through the UK-US tax treaty to 0, 5 or 15%. So also worth bearing in mind. Next slide. In terms of acquiring an existing US business, there can be different scopes of work from an advisor point of view and different available information in doing diligence on a US business. So typically where we have a UK corporate finance assessment of a business, we would look back at historic data as well as forecast information to form a view on the business that you're looking to target. Whereas in the US, the scope of diligence differs. So you'll be looking at the historic information primarily, rather than looking forward and having a view provided to you by your professional advisors. So it's worth just being aware of that in terms of your expectation of information that's available to you and that you'll get from any piece of work in the US. There's also less publicly available information, especially from private companies. So statutory or audited accounts may not be available like in the UK. So what assurance you get from the work that you do in diligence process for a US business may be different. We have quite a bit of experience of that in our UK and in our Leeds office. So for example, one of our corporate finance senior managers spent time in the BDO Chicago office and brings that experience back to Leeds. From a tax point of view, acquiring a US business might change the profile of your group from a UK and a US tax point of view. So there's the concept of a consolidated US tax group, which is worth being aware of, and it might change the structure or how you purchase a US business based on making sure that you have a consolidated US tax group and can obtain the reliefs that are available as a result of that. Next slide. So people for your US operations. This is obviously a massively moving area at the moment with coronavirus, but really you want to consider, do you want people from the UK business going over to the US? Do you want to employ US individuals for your business? And that will really be based on the length of time that you you plan to be in the US, what your plans are, what your expansion might be, and also considering what the consequences might be for the UK individuals going across to the US. Will they be able to travel in these times? Will they be able to get visas? There's also, from a personal tax point of view, for those individuals, they might be double taxed in the UK and in the US. So you might want to think about mitigating that, helping them with that. And also what, from a corporate point of view, what impact having key management overseas might mean for your UK business as well as for the US. Next one, please. So state and local taxes, this is the point I mentioned earlier. So there was a Supreme Court decision a couple of years ago around the Wayfair case, which you may have heard of. And what this really talked about is the concept of an economic nexus in the US. So this is separate to having a permanent establishment in the US. And what the case found is that by making digital or remote sales from the UK into the US, it's possible to trigger tax obligations or consequences in individual states. So you don't necessarily need to have a physical presence in that state. You don't need to have people on the ground in that state necessarily. You could just be making remote sales and causing either tax liabilities or filing obligations. Primarily this was sales and use tax, but this can be expanded to other taxes as well, and it's something that is really worth being aware of based on your current business and also what you plan to do in the future. The thresholds vary state to state, so a typical benchmark might be 200 transactions into a state or $100,000 US in sales, but they do vary massively, so it's something that you need to check. It's also worth noting it's been a hot topic for the IRS in the last 6 months around inbound businesses into the US. So we'd suggest checking, speak to me or Dan. And we also have a section on our BDO US website, which keeps up to date with the latest progress around this case. Next slide. And then the last point I was just going to cover before I hand over to Monica is around coronavirus aid. So as we're seeing on a global scale, there's stimulus packages, unlike anything we've seen for a long time. And the US has had several rounds of these in terms of federal and state aid that's available. Again, we have a section on our global hub of our website which shows all different countries, the latest reliefs available, so it's worth checking that out. Really this will apply for businesses that already exist in the US, so in the tax years 2019 and 2020 is typically what the reliefs are available for, but it is worth checking, and it's a developing position, so it will continue to change as for everywhere. So that's everything I wanted to cover. I'll hand over to Monica just for some of the key messages.
Yeah, thank you very much, Laura. I'll just quickly close out our U.S. tax comments. By way of a quick introduction, my name is Monica Loving. I lead our international tax practice for BDO in the U.S. We cover cross-border tax matters with our professionals based in about 15 of our large market offices across the U.S., really focusing on this dynamic that Laura talked about, the tension and the opportunity in many ways of investing into the U.S. market. I'm based in the wonderful city of Atlanta, which I like to think of the hub of international tax. And my practice really focuses on this cross-border nature of the work due to what we see from an Atlanta economy perspective in terms of the many non-US companies who consider Atlanta as their hub from a US market perspective. It seems daunting based on experience. I hear that from many companies looking to invest in the US. Complex, very complex system of US tax, really effectively 3 layers of US taxation to consider. Our US federal tax rules, which cover the whole of the US, state rules, which are specific to each of our individual states, and then in many cases, separate local rules, depending upon the particular jurisdiction where you're looking to do business, or maybe even certainly just sell into that particular location from a customer base perspective. perspective. But I assure you, with advanced planning and really thinking about your business model, understanding that business model probably does evolve over time as the operations in the US change and mature. With advanced planning and thinking about how that business model will operate, we can look for opportunities to minimize tax through, as John covered in a lot of detail, the great opportunity for business incentives, both at the federal and the state level that we have in the US. There are opportunities to minimize compliance obligations to the extent that you structure transactions in certain ways. And there's certainly opportunities from a people perspective to make sure that you're taking advantage of potential opportunities from a payroll and an employment tax incentives perspective around the individuals that you bring in to work in your US business. One thing that is a constant in US tax over the past few years is change. We've seen a lot of change. We've had a very significant US tax reform at the end of 2017. We continue to see change at a state level as the pandemic has impacted the global economy. We've certainly seen that at the US level as well, and many of our states are in budgetary crisis in certain locations as a result of the economic situation. And so we certainly see a potential impact from a state perspective in terms of how those legislatures look to the future from a state perspective. So change is constant. You continue to monitor that change. Proactive planning from a tax perspective, we can certainly help to mitigate any showstoppers that you might run into from the standpoint of delivering what you need to your customers. Myself and my colleague Tony Manners, who's a state and local tax partner, also based in Atlanta, on the panel today to answer questions. So please, if there are specific areas of interest that you have, send in a message through the chat feature. We're happy to cover those off during the Q&A. Dan, I'll hand it back to you.
Monica, and thanks, Laura. I'm going to pass on to Simon, last but not least, to finish us off on the presentations, and then we'll go to Q&A. Thank you.
Thanks very much, Dan. I feel it's a bit like the Atlanta Appreciation Society today, but I'm not going to spoil that because before joining DIT, I worked for a Belgian multinational, and we had our US corporate head office in Atlanta. So I've spent many happy trips in the area of Atlanta. Next slide, Laura, please. So that's the DIT global presence, where we have our British embassies, high commissions, consulates, and our partner organizations. In the US, we partner with an organization called OCO, and OCO do a lot of the market research on behalf of companies in the UK. Next slide, Laura. I wanted to just talk about some of the resources available. For anyone who hasn't looked at it, please do take a look at great.gov.uk. Under advice, there are 9 sections there covering things like creating an export plan, finding an export market, routes to market. Under the market section, there are details about 109 countries. This was brought up to date at the end of last year. So anywhere from Australia to Zimbabwe, but obviously information on the US. Next slide, Laura. So why the US? We've already heard about it from all the speakers this morning, this afternoon. But our top 10 markets in the UK. Next slide, Laura. We can see up there, the USA has always been #1 in terms of our largest export market. If you add all of the European markets together, that gets close to the US, but in terms of individual markets, the US is still #1. Next slide. And these are some statistics we put together regularly in Yorkshire in terms of the inquiries we get from companies like yours. Still, the biggest receipt of inquiries is from the US. In fact, if anything, it's probably grown in the last year or so. Next slide. And the World Bank is referred to a lot these days, ease of doing business. The last report in November 19. So we're waiting for the next report to come out from World Bank. But if you look at the top markets, Laura, yeah, we can see USA in number 6. So wouldn't any of us say it was easy, but easier markets in the world, and certainly a big potential. Next slide. Yeah, I mean, I was pleased that Tycho mentioned culture and was saying, is the US more like China than European countries? I think this is really interesting, actually, because probably it's the country in the world we'll do least research about, because as Tycho was saying, we've been there on holiday, we've got lots of American friends, we feel very relaxed. So in fact, unlike going to China, Brazil, Saudi Arabia, we probably won't do a lot of digging into culture. So a few suggestions of books you might want to look at. I'm not on commission, but the Culture Shock series is really good. Working with Americans, Alison Stewart Allen. We've had her speak at events in the past when we could afford her. She's now on TV and radio a lot, but a really easy to understand book. She talks through what you should be doing when you're going over there on business. And then What's Up to America, I don't know if it's still in publication now, but I got given that on one of my trips over there in the last few years. And it really explains why the Americans are like they are. It goes back in the history, and a really interesting read. So some ideas of resources you might want to go to, and a few top tips really. I mean, preparing for the meeting, how is this meeting going to go? It's quite a direct culture, so it's a question of getting to the point. We hear, time is money, but certainly time is valuable to your American business colleagues. Think about your USP, your unique selling point. What is special about your product or your service that will offer a solution to an issue your American potential customer may have? So, and think at the end of the meeting about, making decisions. What decision is going to be made? We might have gone over there just on a fact-finding trip. We find at the end of the meeting, they're willing to give us a trial order, which for a small company might tie up the next 2 or 3 months production. So be wary about, what you're asking for, what you really want. A bit of a plug for BDO. They've been very helpful to our clients in the last few years on the US and a variety of other markets when issues have come up. But particularly to John and Tycho, I mean, responsiveness. We've passed various inquiries from our clients to both of them in recent weeks, actually, and their responsiveness are coming back and dealing with those inquiries, which sometimes have been quite detailed, has been very impressive. So a big thanks to John and to Tycho. So that's really all for me, Laura. Thank you very much.
Well, thanks, Simon. Whistle stop tour from you there as per usual, but many thanks. And thanks to all of the presenters today. Really, we asked you to adapt your presentations for the virtual format, and we successfully kept within the hour, which thank you to all of you for doing that. And thanks for the questions that have come in from the attendees. We're going to work through those. And I suppose the first question, one of the questions that came in is there going to be a recording of the event and a PDF? Yes, to both. Both will be circulated after the event. So I'm going to ask my fellow presenters, and Tony Manners, who was referred to, who's a state and local tax principal in our Atlanta office, just to come onto video. And we'll work through those questions that have come in. So I'll start with some quite broad questions first. Simon, you mentioned about some top tips, but I'm interested from maybe from Andrew's perspective first, and then I'll come to John around top tips and bear traps. So from a top tip perspective first, and then what will the unwary get caught out with?
John, do you want to go first?
So I was hoping you would go first. I mean, the top tip. I mean, it's as I say honestly, as I mentioned in mine, is to do the due diligence. The data that I provided, and I saw in the Q&A, someone asked a follow-up question. You can ping me. The information is available. Is there? I mean, you all know your business is better than anyone else. That's why you're doing it, and successful enough, presumably, to consider U.S. expansion. So what is relevant to that business? And so I would suggest ones coming in, you know, from a UK perspective, for example, and Tycho somewhat alluded to this. You all speak English. Well, we all speak English. I think Bernard Shaw disagreed with the efficacy of it, but we do speak a version. And a UK company came in I worked with a few years ago and thought they could do the marketing, you know, their marketing that they've always done, and it's all the same language. And their marketing in the US was a complete disaster. Because it's a different style, different type. And that's an example right there I would give of a company where they thought, as Tycho mentioned, you know, hey, we're all, you know, Anglo-Saxons here or something to some degree, but they thought, well, we can just, you know, transfer this over. It's a different market culturally, as Simon mentioned, and so that would be a bear trap there. But again, I think the folks here can help address that. Andrew, you probably experienced some of that too.
Yeah, no, I would just like to reinforce what John said. I think, and a couple of the panelists have also said this, know what your business is about, know what you want out of the relationship, have a sense of the market. My top tip, and I've worked in 7 overseas posts over the last 30 years, is engage with the people on this panel, engage with myself. I often say that in my 30 years as a diplomat, I haven't come across a more professional Chamber of Commerce than the Metro Atlanta Chamber. It really is smooth, but can't cut up rough and do the right things at the right time. So I would say that people like BDO, Arnold, Golden, Gregory are also around, but seek that advice and don't underestimate the amount of support. The other thing, I think, the bear trap, and this might come across as a plug for the Southeast, you can burn through a lot of money in the United States. Don't just think it's San Francisco. Don't just think it's New York. Yes, you will want to have presence, have engagement, have understanding of those other cities. But think about the bottom line. Think about how you market your product. But don't all rush over to California, because California is saturated. Well, not at the moment, obviously, with the fires that are burning. It's the Southeast that's saturated at this moment in time, or inundated. But think about where you want to be and understand that setting up anywhere in the United States offers that gateway into the whole United States market.
Thank you, Andrew. I'll maybe go to Tycho and Monica around the bear trap side, and I suppose a lot of the answers to those questions around top tips are around planning in general. Plan, and plan again. But I'm going to go to Tycho in terms of, you know, some horror stories, if you like, maybe that you've seen and that should be avoided from a bear trap perspective.
I think one of my favorite examples involves a company in Austria, and I think there are no Austrians in the room here, so I can tell funny stories about Austria. I have this client in Western Austria that has about €1 billion in turnover. They have a general counsel and 2 staff lawyers, and so you would think that they do things correctly. And they sold about $100,000 in, no, it was actually $1 million in product to a company in South Carolina that was on the verge of insolvency. And they had used a good Austrian law firm to write terms and conditions that provided for Austrian law, a venue in the courts of Austria, and title retention under Austrian law. And so they thought that they're fine. And if this company slipped into bankruptcy, they could simply show up with a forklift truck, pick up their stuff, and go home. And that would be that. And the Austrian general counsel, he put his finger on the table and he said, if the Americans want something, they can come here and get it. The problem was that it was actually $10 million in product. The problem was that it wasn't the American who wanted anything. The American had $10 million in product. It was the Austrian who wanted something because the Austrian wanted $10 million to pay for the product. And when we told them that the $10 million in product sitting in the factory yard in South Carolina in original packaging, ready to be shipped, actually belonged to the South Carolina company even though it was wholly unpaid for, that's when they started shaking a little bit, much like I do when I face 100 UK attendees at 8 in the morning US time. And in the end, it took about 1 year and $200,000 in legal fees, and we got them their $10 million. If they had turned to a US lawyer and gotten US terms and conditions, maybe for, I don't know, $4,000, if they paid a $100 filing fee to the Secretary of State of South Carolina to get a security interest, then this whole thing could have been done really quickly. And this billion-euro company has a $100 million business in the United States where they routinely sell 100 million in goods in the United States. Surely they could pay $4,000 to an American lawyer to prepare US terms and conditions and avoid these issues. And so the 3 points that I really want to take from the story are, one, things are very similar here, but they're not the same. And so you'll understand us, but the implementation is not exactly like it is in the UK. So please talk to Dan and Monica and Laura. Please talk to me. Please talk to UK DTI. Please talk to John Woodward and just get advice on how people do it here. Second, the costs, say $4,000 to do terms and conditions that you can use again and again, and a $100 filing fee, really are not very different from what you might encounter in Birmingham and Manchester and Leeds and London in the UK if you're asking a UK lawyer to prepare terms and conditions. The cost really is not prohibitive no matter what you hear in the newspaper in the UK. But third, if you don't prepare and just set yourself up the way an American does, well, then you waste untold amounts of management time and spend the $200,000 in legal fees to get your $10 million back. That's something that you really, really want to avoid. So I think I'm echoing what Dan said, what Monica said, what Woody said, what Andrew Staunton said, really what everybody said, which is please, please do your homework. The costs are not going to be very different from going to business in the UK. Please just do your homework. It's very simple. We're wide open for business. And then Godspeed and focus on your business. None of us are going to get in the way of doing your business. It's going to be very simple.
Thank you, Taito. Monica, a same question for you on the tax side, really, as to whether there are any specifics that we see as a problem for businesses.
Yeah, Dan, I'll just repeat your question. Broke up just a little bit on the audio. So I think your question was driving at, are there specific areas from a tax perspective that we see, as potential trouble spots?
Correct.
Right. I'll speak to the federal side, and then Tony, I'll turn it to you and ask you to give some comments from the state and local perspective. From the federal tax side, I would say one of the areas that pose interesting challenges is cash management. So thinking about your initial investment into the US, how are you going to fund that? Is it going to be a mix of debt or equity? Is it only equity? Is it only debt? And then from an ongoing perspective, how would you like to access that cash that's generated in the US market? Or to the extent that your US operations need additional infusions of cash, how are you going to operationalize that from a treasury management perspective? We often see situations of cash need in the US business, or conversely, excess cash in the US business that the parent company would like to get back home. And there are roadblocks to that potentially from a tax perspective in terms of additional tax costs around withholding tax, and other compliance related matters from a tax perspective. So as you think about your business model, certainly think about how you're going to operate the business in the US, but then think about how you're going to move the cash amongst the various pieces of your group operations so that you have that plan both from an excess cash flow perspective as well as a cash need standpoint thought through up front so that when you need to move that cash quickly, you have at least an advanced plan in place to do that in an efficient way. Tony, on the state side, it's even more complicated, right? Just in terms of the multifaceted level of how to think of the business operations.
Exactly, Monica. I would say two things I would really highlight here would be the concept of permanent establishment. Most inbound companies are very familiar with that, but to understand that permanent establishment has really no direct correlation to the nexus issue. And so in US states, the standard for a state to be able to impose a tax on you is nexus. You have to have a minimum connection to that state. That really does not align fully with the concept of PE. So you can have a nexus in a state and not have a permanent establishment. That's an important point to keep in mind. The second point I would highlight is that I see companies get into trouble when they're unfamiliar with the US landscape because they make the assumption that all states handle things the same way, or all states even have the same taxes. So for example, there are US states that choose not to tax individuals. So Florida, for example, Tennessee, they don't tax individuals on their earned income, whereas Georgia, California, they do. There are also some states that don't have a corporate income tax, some do. And some states choose not to impose a sales and use tax. So I would say be very understanding of the particular market you're going to be based in and the markets you plan to create a presence in the US, and don't ever assume that all US states are the same.
Can I just, Dan, can I just chime in real quickly there, since we're free, and I'm certainly not the accountant here,
Sure.
and I respect, in fact, I'm overwhelmed. I see the majority here are accountants, so I'm treading lightly. But as I did mention in my remarks, and I found that international folks are susceptible to some of these. Well, such and such a state doesn't have a sales tax or doesn't have an income tax. Taxes, the states need to make money. So
Absolutely.
those states are taxing. The states are taxing. So don't be, I would just recommend, as I mentioned in my remarks briefly, don't be distracted by the shiny bauble of someone saying we don't have a state tax or a sales tax. Those taxes are making money, need to make money. And so it gets you somehow. And what I would suggest, and the accountants can agree or not, but those indices that I mentioned earlier, there are things that sort of take into account that aggregate taxation, that aggregate business costs, where you could be. And that's really, I think, an indicator when you're doing those comparisons. So I'll be quiet with that, but I just wanted to point that out.
May I just say two things really quickly, which is on the state and local side, for example, Texas has a gross receipts tax, I believe, which means that even if you're not profitable, you could end up owing money. And we've had clients that have simply missed that and then had huge penalties and payments to make afterwards. So again, please talk to BDO early and often and just get it right. And then the other issue, though, is unless you're going to set up a major manufacturing facility or set up a US distribution hub, taxes are probably, state taxes and local taxes are probably not going to drive your site selection decision. You're going to go wherever your customers are, and then BDO are going to tell you how to manage the taxes. I guess the third thing, just really quickly, is even if you might, under federal or local state law, not trigger a tax permanent establishment and absolutely have to set up a legal entity, we would probably push you to set up a legal entity anyway, so that you don't keep having to worry when you're on this side or that side of the legal line and read the memo. It's just so cheap, quick, easy, and simple to set up an entity. Just do it and then don't worry about it. That's what an American would do. I mean, would you agree with me? I see nodding at BDO,
Absolutely.
which is a good thing. That means I've been listening occasionally.
Absolutely.
Thanks, Tycho. And I'm just conscious there are a couple of direct questions with regard to sales and use tax and the extension onto state and local. So Tony, I just wonder if you could just talk a little around the Wayfair case, some of the thresholds across the states, and how that goes across from sales and use into state tax in certain locations as well.
Sure. So again, going back to Nexus. Nexus is the minimum connection. A company has to have for that state to be able to tax you. So wherever you are organized, and I heard a presenter earlier suggest that Delaware was a common state in which to organize. Wherever you are organized, that state can impose its taxes on you. And then wherever you do business, that state can then impose its taxes on you. So under the Wayfair case, it shifted the historic standard amongst U.S. states. Traditionally, U.S. states had focused more on a physical presence. So you had to have people, property, say inventory for those states where you were not organized to impose a tax on you. Wayfair was a U.S. Supreme Court case decided in June of 2018. And under that case, the statute in the state said you had to have 100,000 of annual sales or 200 individual transactions with customers in the state. And the taxpayer challenged it, saying it's unconstitutional because they don't have a physical presence. And so this statute was really designed to capture remote sellers, people who are selling into their market, exploiting their market, and not creating a physical presence in the state. And so the Supreme Court agreed with the state that they had the right to tax you. And since June of 2018, all but 2 states in the US that have sales tax have now adopted a similar statute, albeit with different thresholds. So 100,000 is commonly used, but there are states that established $500,000 or $250,000 as the minimum threshold in order to be able to tax you. So the reason why this is important is that sales and use tax in the US is really one of the most common things that gets scrutinized in the event you're ever looking to sell your business. And it's also a regular, the concept before the state always looking to raise money. It is regularly audited. And so you don't want to overlook this. You want to make sure that you understand where you should be filing and registered for sales tax.
That's really, really, really helpful. Andrew, I want to come to you about a question about, the current environment in which we're all operating and the ability to, from a business continuity perspective, around, what are we doing around the ability to people to move, some questions around quarantine, et cetera, et cetera. How can, what's being done centrally to try and help around this?
Is that a question to me, Dan, or someone else?
Yeah, in the first instance, Andrew, yeah.
Well, obviously, COVID has led to a number of border restrictions being brought into place. The United Kingdom has imposed some, including quarantine, self-isolation for American business people wanting to come to the United Kingdom. That's constantly under review, the government process. The headlines have been grabbed by Greece and Spain and France, but I think there are discussions between Washington, DC and the UK authorities on what might need to happen. But obviously public confidence is one of the key parts of that. Cases in Georgia, for example, are far higher than they are in large parts of the United Kingdom. So we have to be careful and move forward. In the other direction, you have a president's proclamation, which basically means that anybody coming, unless you're in a specific visa category, anybody coming from the United Kingdom under a normal visa would not be able to travel directly from the United Kingdom or from Schengen countries. And then there are only various categories of visas. So we're constantly lobbying the United States. We are also active from the longer term in negotiations at the moment on the free trade agreement on business mobility, which is all about trying to improve the situation about British companies who want to bring British members of staff, their teams, to the United States and seeing if we can remove some of those restrictions. Quarantine's tough, going back to the imminent. It's obviously impacting on the aviation industry. I think there are discussions underway about looking at the possibility of, can we introduce pilot schemes, if you pardon the pun, that might ameliorate some of that difficulty at this moment in time. But I feel the frustration. But what I would say is that US business people, in many respects, are more accessible at this moment in time via Zoom than they've ever been. Getting in touch and getting half an hour on someone's schedule is far more straightforward now than trying to sort of seek an appointment where you fly in to see them, in 3 weeks' time. So it's frustrating, not perfect.
May I mention one thing, which is our law firm in the immigration group apparently are having good luck getting Europeans into the US under the national interest exception, but I'm not myself an immigration lawyer, so I can't tell you what the criteria are, but that's something apparently that's worth exploring, because my sense is that we've been getting client personnel into the US by the dozen, so it's not a far-fetched thing. It's something that happens quite a bit. Andrew, could I just ask you, from the point of view of UK businesses trying to get Americans over, when I was in Austria 10 days or 2 weeks ago, businesses there mentioned that there were exceptions under UK law For example, if somebody had to go get a production line going again, repair a machine, then quarantine wasn't necessarily necessary. There are certain exceptions to get people in quickly into the UK. Is that real, or is that really a very rare exception?
It's, in the grand scheme of things, in terms of volume, it's rare, but there are exceptions, which and there's lots of advice on the UK government website, gov.uk. The national interest story, I think you're right to talk about engaging with international law firms and with their immigration teams, but I would stress it's probably dozens more than thousands at this moment in time. Obviously, economic interests are a big thing. I've seen some in national security terms, but it is tough at this moment in time. I think you will see improvements as the months progress, but with both countries looking very carefully at the scientific evidence and taking decisions based on how you maintain public confidence, I think there's a little bit more to come before business has many restrictions lifted.
I suppose one of the wider questions, and I think it came in before the event, was a bit: are we seeing a change given the restrictions as they stand? Are we seeing more strategic partnerships and joint venture arrangements, or is it kind of too early for us to get visibility on that? I'm just wondering, is there a bit of a workaround in the intervening period where businesses are partnering with one another? Are we seeing much of that?
From my perspective, it's too early. We're still seeing lots of British businesses, actually. Exports are doing fantastically well. We're still seeing British businesses who want to come and open presence, and I think John is as well. Not at the pre-COVID levels. You know, when Invest Atlanta, who came over for the London Tech Week last June, said that they had enough leads to last for 6 months of everybody just focusing on those leads. So that's dropped off. But we are also seeing US investors looking at the United Kingdom. They're slightly frustrated by that lack of opportunity to get over there. But I think many of them have existing investments, so they've got existing relationships. So that sense of partnering with people you know, partnering with people who have a presence, partnering with organizations like BDO is the way to go, because they've got connections in both countries. We can also play a role as part of the Department of International Trade in trying to fix up some of those interactions.
What we're seeing with about 140 European clients of my own, I'm seeing that we're not seeing an onslaught of new investment at the moment. People are taking care of existing business and existing clients, and folks who are setting up in the US right now have existing clients and opportunities that they want to address. And the US is very much open for business. But my sense is that until we understand which of the two pretenders to the throne is going to be present here in the United States, and until we see what the ramifications of that are, and until there is a vaccine and a relaxation in the general, I don't want to sound political, but the word paranoia and general unease and public confidence, until there's some kind of a resolution there, I think nobody's really making major commitments in the United States or anywhere else. People are sitting on their hands to wait to see what happens. That being said, private equity funds are seeing, if they have cash, that now's a really good time to buy some companies at a fire sale. So there is stuff happening, but sort of general business investment by operating companies, I believe, has slowed significantly.
I would just add real quick, I have a slightly different narrative from Andrew and Taika, with whom I usually agree always, is that I have actually seen, I mean, our team has actually seen, I wouldn't say increased activity, but as others have, I'd say relatively increased activity comparatively, as others markets have slowed down, as Tycho indicated in general. The UK has remained, maybe not say robust, but certainly there's a fair level of interest. And this might be outside of the COVID situation, outside of the presidential election situation here. This might be related perhaps to the B word, and I won't go into that there, but certainly we have noticed. I mean, to be perfectly honest, just this week and next week, there I think maybe 5 or 6 of these UK, US, Atlanta specific seminars. In fact, London Tech Week that Andrew mentioned just last week, there was specifically a London Atlanta seminar. There's one coming up in an hour as well with London and partners. And the activity I've seen, just based on the number of contacts there, is more. Now, will that manifest itself to actual companies doing stuff? We'll see. But certainly the level of interest I've seen specifically from UK is its own, let's say, certainly more so than probably some other countries that are traditional investors in this area.
The sector matters too. I mean, we've seen that IT and e-commerce is really strong, or companies on the bricks and mortar side that are involved in home delivery and similar fields. I mean, they've been coming to the United States from the UK. It really depends on the sector.
I'll come off mute. Schoolboy error. Like one specific question as we approach the end of the session, but if a UK business sell their product to a distributor who sells in the US, does the UK business need to worry about paying initial importer, establishment registration, FDA, or other registrations for the product to be sold by the US distributor, or is this taken care of by them? Practically, is that something that you would deal with?
In terms of the importer, I would actually suggest, please, a conversation with BDO. Y'all have Damon Pike, I believe, who is my go-to guy for that sort of thing. He's awesome. I don't know the answer there. In terms of FDA matters, if you're shipping and if you're manufacturing and shipping products into the US that may need to be FDA registered, you could have an issue. So it's probably worthwhile getting some FDA advice. Just to wave the flag, we do have an international FDA practice in our law firm. We'd be happy to talk to you offline and see, what you need. Often, if you have a smaller company that's making its first initial step, you will try to offload some of these regulatory compliance obligations onto the distributor or the importer by contract. However, if the distributor or importer screws up, you may not get out of legal liability. So you have to make sure who it is that you're doing business with. And if they obtain certain regulatory registrations and the like, then you want to make sure that they are assigned to you so that the importer or distributor doesn't hold you in their hand afterwards and can renegotiate after a year or two when you start to get some traction. So my suggestion is for you specifically, let's please speak offline so we can find out exactly what's going on. And on the customs issues, please give Dan, Monica, Laura a call so that they can introduce you to Damon Pike.
Yeah, sure. Okay. Molly, anything you want to add on that before we wrap up on that point?
Yeah, Dan, I mean, just to mention to the group, global trade, customs and tariffs from a US perspective is a very complex area right now. Certainly products from the UK, EU, China, Canada, some specific actions from a US perspective around importation and tariffs on certain types of product categories. It's really, really very highly specific in terms of the type of product down to almost a 10-digit level of the classification of that product. So there's a lot in the news that you read from a general business press perspective around this topic. I would say certainly seek out some specific advice as it relates to your product at a very specific level to consider the import duty aspects.
Just on that, Dan, I would agree fully with that point. It's a very important one. There are some tariffs as part of a Boeing Airbus dispute as well. But just to reinforce that's the reason the UK is trying to negotiate with the United States a free trade agreement, so that we try and improve the situation and ease the cost of doing business, but some of the bureaucratic hurdles. Is the fourth round of negotiations at this moment in time. So I'm hopeful that if we were here in a year's time or 18 months' time, we'd be talking about what does the new free trade agreement mean for doing business between the United Kingdom and the United States. One can always have lofty ambitions.
Yes, we'd like to see that too.
I think at that point we'll wrap up. But thanks so much to the presenters and thanks to the attendees today. I understand I've had a bit of a problem with my sound and my microphone. I hope you've been able to hear the vast majority of this presentation. It will be circulated afterwards, as well as a recording of the presentation. Any questions we haven't answered today, we will answer subsequently, and we'll come back individually to those. Our contact details are at the end of the presentation, and we welcome any further discussions. Thank you.
Thank you.
Thank you now.
Bye-bye, everyone.
Thanks.
Thanks. Bye-bye.
Thank you.
Take care.